Hey everyone, Couch Investor here. We're back with another video. It's going to be a busy evening. We're starting the evening with earnings from Shopify. We're going to jump into PayPal later on. And if I have time left, we're going to talk about Mercado Libre. If not, it's going to be tomorrow before the market opens. There's still a lot of companies to cover. Lemonade, Unity. Tomorrow we have Block, Airbnb, Amazon, Apple. A lot of companies will be reporting earnings. It's going to be an exciting time. Expect volatility. Now, with regards to Shopify itself, it reported a double beat, EPS and revenue. Now, what exactly has happened? Of course, remember last quarter they announced a 20% reduction in workforce, plus they sold their logistics network to Flexport. So how did that impact the business right now? What's the guidance going to be? We're going to jump right into this. So the headline here is revenues up 31% year over year, cash flow positive for the third consecutive quarter. Now, a little comment here from Harley Finkelstein, the president of Shopify. Our business momentum has led to another quarter of strong financial results. We're not just shipping products faster, but we are also expanding our global merchant base, all while improving our ability to generate greater free cash flow. As we lean into the new shape of Shopify, our focus remains on building the world's best product to empower entrepreneurs and businesses everywhere. So of course, as always, let's go over some of the highlights here. They released the Shopify editions for the summer of 2023. It's on their website if you want to go over the 100 updates. Some of them are pretty cool. We already talked about the Copilot one, basically the AI chatbot that helps you with your business, increase sales, promotions, change things. It's pretty useful. So the first thing here is Shopify Magic. It's a suite of AI-enabled features integrated across the Shopify platform to make it easier for merchants to run their business, analytical tools, etc., etc. Shopify Marketplace Connect app is a centralized hub for merchants to sell on all major marketplaces, including Amazon, eBay, and Walmart, while connecting, managing, and fulfilling their orders through Shopify. And then last thing here, they completed the previously announced sales of the Shopify logistics businesses. Then, when we talk about the overall numbers, so GMV increased 17% to $55 billion, an increase of $8.2 billion over the second quarter of 2022. And there's also some improvements here quarter over quarter, which is always nice to see. Total revenue increased 31% to $1.7 billion. That's up 31% on a constant currency basis. Merchant solution revenue increased 35% to $1.3 billion, whereas subscription solutions increased 21% to $444 million. Now, I do want to go and look at the expenses of those two sides here. So as you can see, subscription solutions, merchant solutions. If you look at the cost of revenue for subscription solutions, that has not increased nor decreased year over year, yet the revenues have increased. And cost of revenue for the merchant solutions is approximately the same as the increase that we're seeing here with regards to revenue. And so going back to the financial highlights, GPV or gross payment volume grew to $31.7 billion, representing 58% of GMV. Now, the monthly recurring revenue as of June 30th increased 30% to $139 million. That's also an increase quarter over quarter, not by a lot, but still a positive. They say here that the gains were driven primarily by the pricing changes that went into effect for our existing merchants in late April and continued growth in the number of standard and plus merchants. Shopify Plus contributed $41 million or 29% of monthly recurring revenue compared to 31% of MRR last year. As for gross profit, that grew 27% to $835 million compared to the prior year. With regards to gross margin for the quarter, that was 49.3% compared to 50.7%. And now that's driven by a higher mix of revenue from their lower margin merchant solution segment, and primarily from the lower margin revenue contribution from Deliver. Now, with regards to operating loss, it is much higher, but it's $1.6 billion, but it includes $1.7 billion in one-time items from the impairment of acceleration of stock-based compensation related to the sales of their logistics business, as well as severance. Excluding those one-time charges, operating income was positive for the quarter. But of course, the headlines, the algos, they don't really read the fine print. By the way, if you're enjoying this type of videos, leave it a thumbs up, subscribe if you have not. Would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now let's continue. Adjusted operating income was $146 million or 9% of revenue, compared with adjusted operating loss of $42 million or 3% of revenue. Now the difference primarily reflects higher revenue compared to the same period last year, as well as lower adjusted operating expenses. As for capital expenditures, those were $21 million compared to only $12 million the same quarter last year. But here it comes, and this is going to be interesting when we're going to look at guidance. So free cash flow for the quarter was $97 million or 6% of revenues. Last quarter, it was also 6% of revenue, but the dollar amount is now bigger. This is compared to negative free cash flow of $87 million or 7% of revenue in the same quarter last year. As for cash and marketable securities, they ended the quarter with $4.8 billion. Shopify Capital had $719 million in loans receivable and merchant cash advances outstanding on June 30. Now, with regards to outlook, and this is the line that I loved, so I'll start with that already. Free cash flow profitability for the third quarter of 2023 will be greater than the entire first half of 2023. I think as long-term shareholders, you should love this. Of course, we know that Shopify is not cheap at all. If you look at valuations, you're paying a very, very high premium. But it's nice to see that they are starting to grow the top and bottom line at a, let's call it, rapid pace in the current macro environment. So, with regards to third quarter, what do they expect? Revenue to grow at low 20s percentage rates on a year-over-year basis, which translate into a year-over-year growth rate in the mid-20s when adjusting for the 300 to 400 basis points headwind from the sale of the logistics business. As for gross margin percentage, that will be approximately 2 or 3 percentage points higher than the second quarter of 2023, gross margin of 49.3%. We look at stock-based compensation, that will be approximately $110 million. And so looking at the major overview here for Shopify, currently still close to 80% being up year to date. If you look at the analyst estimates for the next 2 years, so fiscal year 2024, revenue should increase around 17.8%. Then EPS increase 61.8%. So again, huge acceleration when it comes to EPS compared to what we had last year. Fiscal year 2025, close to 22% growth for sales and 58% growth for EPS. Now again, valuation, as you can see here, very, very expensive in the next 12 months, 140 times PE. So overall, it's a double beat. It's a nice report. Guidance is fine, especially if you look for that free cash flow. But since the company is already trading as the high premium, maybe the market would have wanted to see a bit more, maybe investors as well. Those of you that are watching, do let me know down in the comments below. But hey, for now, things are going into the right direction. And so if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.